Hello viewers, a bit of market analysis for you now. What's the latest hot commodity out there? I think the world's moved on from cocoa now, and it appears to be going to that yellow shiny metal gold. Price currently moving on up very nicely, trending strongly. But why is it doing it, and where could it be going to? Well, the fundamental reasons, economic outlook in the States looking a bit more improved, better jobs and market data, inflation, interest rates expecting to be pulled down over the rest of 2024, and Donald Trump part 2 looking more likely, all adding to the bullish sentiment for gold. Also, see, if you look at the gold stocks, they're trailing quite heavily the rest of the market, so there's some good upside potential there. So also consider ETFs around gold miners, gold stocks if you want to play the gold price, but they will also add impetus to that move. I'm going to take you through the technical analysis, a bit of call it sentiment analysis as well, piece it all together, and we're going to try and come up with some price targets, some analysis to see whether that gold price can get to the magic 3,000 number this year. So with that, let's take a look. So a quick look to start what's going on right now. You can see up here, a bit of a quiet day so far. It's early doors. It's the 17th of July. I'm doing this from the UK. It's about lunchtime here. Not much going on, but the previous 2 days you can see been pretty positive, pulling up that price. So let's see what happens on the US Open later today. Maybe a bit more buying in there. So moving on, look at the weekly chart here, Heikin Ashi chart. Again, the big takeaway, that lovely move on upwards, pushing the highs at this near $2,500 mark. What's the move been? Let's pull some. It goes from, let's go to the point of control at the moment to there. It's up 92%, let's say. That's a very good increase for the metal. Point of control, you can see way down at these 2019 levels, $1,300, where all the volume at price is. Then we've got that scoop, you can see there, up to this volume block, which takes the price back down in terms of pullback to the 2000 sort of area. That would be the bigger term retracement. You can see a lot of resistance along there, along the top before it broke on up. If we can get higher, we're talking about that 3,000 mark. Next stop 2.8, then just under at 2,976, and then Fibonacci giving us 3,200. How long it takes to get there, very difficult to predict, but they would be the next Fibonacci long-term targets on the weekly chart. You can see also at the bottom we got weekly trends, weekly indicators, all looking very bullish. So it's a good picture at the moment. I suppose the caveat, the warning in there, this pullback area to 2,000. Not a lot of volume in that gap up to where we're at today, so could easily slip back to 2,230, say, and then down to the 2,000 mark, like I said. Dollar strength also important to our analysis here. Sort of an inverse play most of the times, and as you can see, it's been weak since the start of July. Bit of a pullback, but coming into this resistance area, so watch that carefully. Are we going to see a rebound that might negatively impact the price of gold? Any move further down, it's also going to strengthen the possibility of gold going up. Now, the gold-silver ratio, very popular in this market, shows how many ounces of gold you can buy for 1 ounce. How many ounces of silver you can buy for 1 ounce of gold, and used as a sort of a mean reversion type play. What you're looking for is lower levels to indicate more bullishness in the price of gold, high levels for weakness in the gold. It's when they inversely play each other, gold and silver. when's the right time to buy and sell each. And you can, this is on a daily chart, you can factor in your own analysis and bring it to maybe closer time frames. But I do like this outlier downside here that can potentially signal a lot further strength for the price of gold to get up to around about the 90 ratio mark. And what else we got? We've got some sentiment data here. We've got the commitment of traders and seasonality. Gold, as you know, is quite seasonal in terms of jewellery purchasing, but also it's used outside of that. Not many people think of it used in electronics, medical, computers, dental. So it is a quite diverse metal, but it does create seasonal patterns. And at the moment, we are, as you can see down the bottom, reasonably bullish, and through to August also pretty bullish, before coming off mid-August towards sort of early October, and then it shoots on up again for the remainder of the year. So some good opportunity there seasonality wise. Now, commitment of traders data here, I've got the large speculators. They're the ones that want to follow the price of gold and should expect to be quite correlated to it, because that's their job to get the play right. And as you can see, it's all been a one-way street really. It's gone flat, so the market there saying that it's looking like bulls all the way out, as you can see reflected in the price. There's no downside dip. This data comes out every Friday, so watch out from the CFTC for any changes, but it's holding very strong at the moment. And then the line break chart, I like to use this one for price reversals. Let's just zoom in a bit there. As we know, we're in the bullish trend, as you can see, but there might be those of you out there that are looking for the reversals in the price. What key levels? Well, the line break chart, I use a 4 line break chart here, and I like to be more aggressive and use a 4 line break with a 2 bar reversal. That will give you a short trade around the 2419 area. A bit more conservative around about 2300 before it could possibly break down further. But keep your eye on it as that, if we're bullish, moves up for those reversals using that criteria. But at the moment, it's a short play on the line break chart. And moving into my favourite charts, the Renko ones for the longer term view. Down the bottom, we've got bullish indicators, and using an 8 block for those interested on this Renko chart here. So the indicators giving us bullish trend, and oscillators bullish as well. We got the point of control with the volume at price here around about 2350 area. You can see running straight through the smack bang middle there. We've got a Bollinger Band breakout that occurred, when was that, 11th of July, about midday, pushing to that very nice uptrend. You can see not a lot of volume there at the moment, so hopefully you can build out something there soon. Let's overlay the Fibonacci to see some potential upsides using the Renko chart here. If it breaks on up through the near 2500s, these are going to be more shorter term targets. We got the mid 2500s, maybe 2650 area as well. That's a good solid move on upward. In terms of the downsides, use the Fibonacci sort of ladder as that sort of support resistance type play. We've got the 61.8% line, 2400, and we've got a scoop of lack of volume down to the 38.2% line, just around 2400. Well, call it 2375 sort of area, around about this sort of number. So some key shorter term pullback areas for you there to consider. Now heading into the shorter term Renko chart using a 3 block size. Again, we've got strong trend in play. Bit of a short term pullback at the moment. You can see just up there on the chart. But again, we're seeing over July so far, a very good strong month. And shorter upside Fibonacci possible target areas, again through the highs, maybe this pullback where maybe it's settled around the 2450, if not that 61.8 4225, call it, and then we might see that pull back on up by the dip opportunity. Then, like I said, we'll be targeting the mid 2500s, pushing on towards 2600 in the shorter term. So we've done all the analysis. Let's put all that together in one place to, summarize where we think gold is heading next. So unsurprisingly, I am going bullish for gold. Fundamentals looking good, same with the technicals and sentiment behind it. Now looking at our dashboard here, we've got, like you can see, the bullish overall opinion top right. Seasonality COT looking bullish. We're looking for bearish dollar strength, which we've got. If you're interested in short-term plays, that one's a bit longer term, for more of a collapse in the price down towards those Fibonacci levels we highlighted. Then the line break chart you could use there. But in the top left, Renko, all very bullish. I've been a bit aggressive on stop loss entry there to give some bigger risk reward trade below that you can see there. Upsides 6.6, 10.6 to 1 for gold. Downside still not bad really, 1 or 2.18 to 1. But like I said, overall I'm going bullish gold. There you go, that's the analysis, and it's not looking too bad for gold. Let me know in the comments what you think of gold. Is it going to be a bumpy ride up, or are we delusional and it's just heading on south? Like to hear your opinions there. And also don't forget, those gold stocks, gold ETFs to look at if you are bullish. The gold price also worth considering, some value in there too as well. Now if you've liked today's video, please give us the thumbs up. Don't forget to hit the subscribe and notification buttons to receive future content that I will be producing. And if you've liked the technical analysis, especially around the Renko chart, I've got a great playlist I've put together on the YouTube channel, almost like a mini course. Start your way at the top, work your way through to the bottom, and you'll become a Renko master before long. And that link, that video clip playlist coming up right now.